Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at the top 5 QQQ stocks. As you know, QQQ represents the top 100 tech stocks in the NASDAQ market. And out of that, the top 5 stocks, namely Apple, Microsoft, Amazon, Facebook, and Tesla, account for more than 40% of the market value of QQQ. So if you master these stocks and their price changes and their technical analysis, you almost covered half of QQQ market value. What we're going to do is first let's get a little brief introduction. Here are the top 10 stocks in QQQ. Apple has 13.39%, Microsoft 10.76%, Amazon 10.66%, Facebook 4.26%, Tesla 3.45%. Google has two different shares, Class A shares, which is 3.42%, and the regular Google, which is 3.31%. So together, Google has like 6.73%. NVIDIA, the video card that you have in your computers, that is 2.88%. Adobe, of course, Adobe is the one which you use for photography, for Lightroom, for Premiere Pro, video production, and PayPal is about 2%. But as I said, the top 5 make up more than 40% of the NASDAQ QQQ ETF. There are a lot of pros and cons about high-tech industry, and NASDAQ 100 or QQQ is at the pinnacle of tech innovation. Over the last 10 years, it had a 20.16% annual growth. So that is very pro and encouraging. And some of the positive aspects of QQQ or the NASDAQ index is you get big rewards during a bull market. Number 2, there's a long-term growth potential as shown by the previous slide, where there was a more than 20% increase over the last 10 years. This is one of the most heavily traded stocks, and as a result, it's easy for you to get in and get out and cut your losses if you're on the wrong side of the market. The expenses are low because it is such a huge ETF comprising of several $billion. And here are, in a nutshell, pros and cons. I talked about the pros, now cons. Anything that goes up real high has a tendency to come down real fast, real low. And that's what we have seen in the last 3 weeks on QQQ, which I'm going to be talking about in a minute. High tech is high volatile sector. Today, a tech company may be real famous, but 2 years down the line, it may be out of existence. We have so many tech companies that disappeared, or the competition bought them and buried their products. So it is highly risky sector in the country. Usually techs have high evaluations. Their PE ratios never compare to the real value of what the tech is, but it's always forward looking as what it can potentially produce. Another point is it has no small caps, so you're going with high flying stocks. That means you have a tendency to go high, but you can also get beaten up and lose substantial amount of your assets, which I'm going to explain in a couple of minutes, but with real graphs. So we're going to start off with QQQ. As you know, we had a pretty steady uptrend in January and in the first couple of weeks of February. February 16th marked a tragic downturn in the QQQ and of course Dow and also S&P markets. But NASDAQ QQQ took the biggest hit here, and as you can see on 16th the top was around 338, and it dropped last Friday to 297 with a total drop of 12%. The support level is around 292.75 and the resistance is at 311.74. This remarkable change, which is like in a candlestick, they call it as the classical hammer sign. It's a strong indication that the market may be reversing. Hold your breath before you jump up and put your money. It is not always convincing that when you see this one, it is the end of the bear market. And let me explain to you, and it applies to all the other stocks which I'm going to be looking at, the top 5 stocks. Number one, the market opened here, went high, came down, it closed lower. The following day, the market opened a little bit higher, came all the way in, the sellers were in charge and they pushing it down all the way to 297.50. Finally, the bulls came with vengeance and they started to buy and push the stock all the way to the top, closing at the point where the stock opened yesterday, and also had a really... So this is a bullish trend, but in the stock market they say always you have to wait for the second shoe to drop. And that is important because let me look at some other things. As you can see, this is the 20-day moving average from the Bollinger Bands. They are all at the bottom here. And this is the short-term moving average, which has crossed the intermediate moving average. So everything is looking down, and the stochastic is reached 20%. Then it went up and it came down, and it is at the stochastic is at 16% or so, but it hasn't crossed the line. When the red line crosses the gray, that's an indication that to get into the market, according to the technical analysis. I have a feeling that maybe this is the end of the correction, and if it is not, we may see another couple of days of zigzag, just as we saw here in September and October, before it starts to take a new wave. That will be the B wave, which will be another A, B, C. So the whole thing that we have here, I feel, is a major A wave of a correction. Then we're going to have a B wave, which is going to come and go like this. So that is as far as QQQ is concerned. Now let's look at some of the other components. So let me see which is Apple. Let's look at Apple here. As you can see, the Apple had a pretty good run up and reached a peak of $145, and just Friday it dropped as low as $117.57, and the drop in Apple price was close to 19.16%. In fact, Apple had the highest drop in the stock price during this correction. Again, as I said, all these averages are moving down. The stock prices are at the bottom of the Bollinger Bands, and here is the resistance at 128.80 and a support level of 115. It was down to almost 117. I feel we might not have hit the bottom yet. The next 2 days, like Monday and Tuesday, may clarify this dilemma that I have, because I am looking at a pattern similar to what I am seeing here in September and October. If you go and pull up a 1-year chart, you will see, for example, if you look at a 1-year chart, this is what we are seeing here, and this represents this one. And what we have seen here is this nice bullish candle, but I have a feeling there may be a couple of other days where it may take a real downtrend, and there could be like a double, what we call double bottom here, I should say, that may conclude the... So in conclusion, Apple had the biggest drop. The support level is at 115.17, which is not too far from where the market dropped on Friday. The resistance is at 128. If I'm a gambler and I want to bet on a stock, I would bet on a stock that has dropped the highest percentage, which happens to be Apple, because there's more room for Apple to grow. And as I said, the earnings are going to be coming up in about 6 to 8 weeks. So usually these stocks start moving like at least 4 weeks before the earnings, and I mean that's my optimistic prediction, and that's why I think it may move a little bit here, just as it did here in September and October. So that's Apple. Let's move to the next one here, Microsoft, MSFT. Okay, this is Microsoft, which looks quite different from Apple. And as you can see, the Microsoft, the high was 246.13, which was here, and it dropped to 224.26 on Friday, or maybe even Thursday here, and the percentage drop was only 8.8. So it was able to hold pretty steady, Microsoft, which also means that the drop was not significant unless the stock has a real good news coming up with the earnings. The increase you see may be proportional to what it lost during the second wave of the correction, which is the B wave. I mean, that's my speculation. This is not an advice. This is not a professional advice. And again, the red line has not crossed the red line is supposed to cross over the gray line, which is the red line is representing the 14 period. The gray line is representing the 3 period. So this has to cross, then only we feel that we are in the real new trend. So all these things sort of still leave some uncertainty as whether we have really touched the bottom, but it doesn't matter. In a couple of days, I think from all practical purposes, hopefully this will turn around and start moving upwards. Okay, that's Microsoft. Let's go to the next one here, Amazon. Okay, Amazon is interesting. Okay, here's Amazon. Is it Amazon? Okay, Amazon is here. Unlike Microsoft, unlike Apple, Amazon looks a little different. Amazon had peaked not on February 16th, but back here in October 2020. And then from there, it has been sort of going through a narrow, squeezed baseline. And it was trying to break through this baseline. And this is where I think February 2nd, and this is February 16th, where the rest of them started to crater. Anyway, it has gone down from 3,400. This is high, 3,434. All the way down to the lowest was 3,000. It had a 14.4% drop. And as I said, all the indicators are showing as oversold. And it's like the stochastic is trying to cross over. It is better than the other ones we have seen. And again, as I said, it came in, it didn't really close as like a green candle hammer. But nonetheless, this is a reversal pattern. But in stock market, they say you wait till the second shoe drops, which is you sort of retrace this one and then go back up. And since the earning seasons are going to be coming up in 6 to 8 weeks, I think there may be some positive movement in the stock, especially if it has been beaten up like this in the last 3 to 4 weeks. Again, the support level is 24.42. Yeah, the support level is way down here, and the resistance is 31.72. Let's move to the next one here, which is here's Facebook, which is, as you can see, not all NASDAQ QQQ components are created equal. They all have different stories to tell. They all have different waveforms, but they follow a general trend, but some of them peak weeks and months earlier compared to the other ones. That's why it is very important to put them all together like I am doing in this presentation and see where they are heading. And if you want to trade individual stocks while you are trading QQQ to make up for some loss, then you know which stock you want to pick. If you think you're in an upward moment and you want to recover some of the losses, I may want to go into like Apple, because I'm hoping maybe there's more room for Apple to go up, because Apple is a very stable company. It's been producing new products. Hopefully that will propel the price to come back. Whereas Facebook, it peaked on November. Remember the other one, Amazon peaked in October. This peaked in November to a high price of $297.38. Let's bring up our PowerPoint here. $297.38. And from then it has been on a down slope here, which is on a totally different cycle compared to the QQQ. But nonetheless, since we are at the tail end of the major QQQ correction, I'm hoping maybe this will turn things around. And as you can see, it is basing around at this level. And when it is basing around the resistance and the support levels, there are two things that can happen. Either it can break out to the top or it can break down. It all depends on what happens. But given the Bollinger Bands, the stochastics, the moving averages, it looks like it had a pretty good bounce here, and it was solid green on Friday. Let's look at this. It had a 14% drop from November, not from February 16th, where most stocks started to, where QQQ started to tank. Because it's been going zigzag here, it is not clear if this is going to make a major breakthrough up. And also remember, there's a lot of noise going on with the social media. There are a lot of, like in India, they are bringing up more rules to prevent these social media from censoring freedom of speech. Even in Texas, just this week, Governor Abbott introduced laws to protect freedom of speech in social media. So there's going to be more and more interventions from various states, which will kind of put pressure on the social media. It's a side note besides technical analysis, but that's something to keep in mind. And let's see one. Okay, we'll look at Tesla one more. Do you really want to see Tesla? Maybe I should have shown you this one first, because once you look at Tesla, you know, you're going to be so depressed. You may stop the video, but I want you to watch the entire video because I have some important conclusion at the end of the presentation. Anyway, let's look at the Tesla here. Tesla, is this Tesla here? I haven't clicked. Okay, Tesla. Tesla looks like the QQQ correction, but when you look at the numbers, you're going to be astonished. Tesla, the high was $900.40. The low dropped to as low as $539.49, and the drop in this period was approximately 40%. 40%. The highest drop of all the top 5 NASDAQ stocks. Even though all the indicators are showing that it is oversold, still, as you can see, the candle made a reverse, but it didn't really quite take charge of the uptrend. And the resistance is at $160. What is driving Tesla prices to this rock bottom in the NASDAQ? Even though it is only like 3.5% of the NASDAQ, but still it can contribute significantly with losing almost like $360 per stock. So many billions of dollars lost from just Tesla. So there's room for Tesla to come up, but there are other external forces as far as electric cars are concerned. There are a lot of electric car companies coming up in the market, and the competition is going to just heat on an ongoing basis, because people are just going to look at whatever is most practical for them, whatever is most reasonable for them, if it takes them from point A to point B for most people. Okay, keeping that aside, these are the technical analysis of these stocks, and let's see if we can... okay, I want to conclude with this PowerPoint presentation here. Let me expand this a little bit. Okay, in conclusion, ladies and gentlemen, as we saw, the NASDAQ QQQ dropped by about 12%. Apple by 19.16%. Microsoft 8.8%. Amazon 14.4%. Facebook 14.4%, and Tesla 40%. I would be hesitant to, put money in Tesla, because if you had put money when it was $900, you would be down 40%. So we don't know how far it's going to go down. If the stock market were to turn bullish, if there are technical indicators which show that the stock market is now headed in a positive direction, where would you put your money? Would you put your money where you had the biggest drop like Apple, or you go with Microsoft? Because the stocks that had the biggest drop may have a bigger potential to come up and maybe a better return compared to a stock which dropped like 8 or 8.8%. I mean, I'm just asking a question. I'm just presenting this educational presentation to increase our knowledge and increase our ability to analyze these things. Amazon, another thing you have to understand, with the vaccination, businesses are going to open up. People are going to go back to their offices. People want to go to the mall. People want to go to the movies. So the overwhelming online shopping, is that going to stay the same once majority of the people are vaccinated? This is a question, and that's why we have to decide all these things. And I talked to you about the social media being on the spotlight with the people, with the politicians, and the world leaders. Is that going to affect their prices in the long term? And Tesla is anybody's guess. Maybe you can put some comments as to why Tesla has been just taking a nosedive and when is it going to turn around. I hope this has been educational to you. I mean, that's the main purpose. It is not a recommendation to buy any stock or to drop any stock. Please do subscribe to our channel and we will see you next time.